It's about that time of day again. My name is Joseph. It's Monday evening, December 5th, 2016. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and the FDAX this evening. Crude is bearish after the buyers failed to retest the highs this afternoon, and price collapsed this afternoon on news that OPEC nations continue to see record high output even in the wake of the recent agreement to cut production. The S&P 500 is bullish and trying to retest today's highs, possibly reach a new all-time high tomorrow or later on this week. Gold, the yellow metal, also bullish this evening, but trading at the high of a trading range, which means the most reliable buying opportunities will come down at the low of the range or after a successful breakout pullback to new highs. The euro, the 6E, is bullish and trading at major resistance this evening after a very strong move for the bulls today. Buyers on the euro are waiting patiently for price to pull back so they can find a way in on this move without buying high. And the old FDAX also bullish tonight, trading at trying to retest today's highs after the buyers waited for a deep pullback and now have a target to go back to retest the highs and possibly the prior month high, waiting for the FDAX tomorrow. Got another great newsletter for you guys and gals tonight. We got plenty of reliable trading opportunities this second full week of the month of December. Hope you guys had a great week so far. Hope you had a great weekend, by the way. Great to be back. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for a full-length version with all the video, right, all the analysis across all four markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts. Right below the video tonight, you'll see a link there to download today's charts. That way you can have access to all the charts in tonight's video and have them ready for your trading session tomorrow. In the upper right-hand corner, don't forget, if you're not a member here at School of Trade, I got a free pass for you. You're going to learn more with me in an hour and a half on that free pass than you will anywhere else on the interwebs. If you're not a member here at School of Trade, grab that free pass. And of course, don't forget, if you're brand new here to the SOT community, if you're brand new here to School of Trade, don't forget we got a great frequently asked questions page on our blog, and I'm always here to answer your questions as you have them along the way. Use that live support button on the right-hand side of the website. Boy, we finished up an incredible week last week. I really hope you guys were able to use my newsletter last Thursday evening to make a great profit on Friday's non-farm payrolls. Boy, did we have our finger on the pulse, right, last Friday morning. Hope you guys did well last Friday. We're back here for another big week ahead of us. Today was Reaction Monday. Today was the Monday following Friday's non-farm payrolls. We were definitely waiting for a big explosive reaction to last Friday's non-farm payrolls. That's exactly what happened. Looking at the charts, though, looking at the calendar here tonight, getting ready for Tuesday, December the 6th, right? Tuesday, December the 6th. We don't have a lot here in the overnight session tonight to worry about. There's not a lot to worry about here coming in the overnight Asian session, so we'll jump right into tomorrow's London session. We're going to get started here. We got some Red Star news coming from the Consumer Price Index in Switzerland. I don't expect that to be too big of a market mover tomorrow. We'll go right into the international trade number here at 8:30 in the U.S. session. Jump down, of course, then right to the 10 o'clock factory orders, and then tomorrow night we get that GDP at 7:30 p.m. So looking at the news here for tomorrow, I'm not expecting the Swiss news here at 3:15 to be too big of a market mover tomorrow. I would imagine the major news tomorrow will be coming in from 5 a.m. from that GDP, although it's not really a Red Star news here. So most of the news tomorrow will be in that U.S. session after 8 a.m. We get the international trade tomorrow at 8:30 a.m. We got the factory orders at 10 a.m. Those are expected to be the big market movers tomorrow morning. We may get a little bit of a movement of the needle there tomorrow morning at 5 a.m. From the GDP, but I'm not expecting to get a lot before we get into the U.S. session tomorrow morning as far as market moving economic news events go. So watch the 8:30, watch the 10 a.m. factory orders, and we'll talk more about the GDP tomorrow night. I'm not expecting that to be too much of an important event as well. So mark your calendars tomorrow for 8:30 and 10 a.m. Eastern time. And of course, don't forget, we'll be in real time tomorrow morning in our trade room, right? Trading all of our strategies with all of our advanced members. I look forward to seeing you guys there as new students, new clients here tomorrow in our trade room. Be aware of that news for tomorrow. Let's jump into our charts here tonight and let's get this plan of attack ready for Tuesday's session. Crude is bearish after the buyers failed to retest the highs. They sure tried a bunch of times this morning, and price collapsed on news this afternoon that OPEC nations continue to see record high output even in the wake of the recent agreement to cut production. The sellers have clear control after price collapsed this afternoon, but only the most aggressive sellers will try to sell at such a low price. So our plan will be to look for selling opportunities up at resistance levels overhead using traps and failures for a move back down to retest the lows. Buyers, on the other hand, have zero proof of control right now. They need to stay patient because the only reliable buying opportunities right now will be taking profit targets on selling opportunities tomorrow until we see proof of a change in direction. One of the most common mistakes that I made as a new trader, and I see a lot of new traders continuing to make, is to look at this market and think, after this big move down, it can't keep going lower, can it? Time to buy? Only thing I want to be buying right now is my way out of a short position, because as soon as this price rises high enough off of these lows, you're likely going to start seeing more sellers aggressively enter this market. I would imagine right now there are going to be sellers waiting to sell above the 27, waiting to sell the 51.50, waiting to sell the 51.70, waiting to sell that 51.85, knowing that the odds are on their side to come back and retest that low. So although we may get a move higher here, it is an unreliable time to be a buyer after we see such a strong move lower. The hard part is that you never quite know how far it's going to come off these lows before those sellers start piling on and they sell this thing back down to retest that low. As you can see here right now, we have pretty much a multi-tiered bear channel that I've got in the chart. That really is the most important thing right now. The multi-tiered channel is a great way to kind of illustrate how a bear channel explodes through that low, right? I don't want to forget about, in all reality, this is the channel. In all reality, that is your channel. That's where your rotation comes from. And then we kind of collapse back through those lows. Well, obviously at this point now it becomes more of a hidden bear channel than anywhere else, right? Connect the highs, bring that down, right, at that first low. That's really all you can do. That's really all you can do is grab it and put it at that low. And of course, price rolls right over, right? So this is what happens when you try to buy into a runaway bear market like that, right? You try to buy it, and what ends up happening is it comes down, stops you out, and then reverses right in front of you, right? Makes you frustrated because it goes without you when if you were just held onto your position. But the problem though is you don't know, right? You can't hold that position into that low unless you're going to buy more. Right? Only way to buy this market right now is if you're prepared to buy more as the market goes against you. So whenever I see a bear channel like this, I know that obviously the bears have control. Now it's just trying to find an area of resistance. I don't want to sell low like this. I want to sell up at resistance. The ideal area here to be watching is going to be this area right here. Now with such a big move lower, we may not get the rotation all the way back up and then back down. Let's just be honest. In a perfect world, I would tell the crude bears, hold off until we can get up top of this channel so I can sell the high of this channel. Wouldn't that be nice, right, if they listened to us like that? Probably going to be, it's a possibility tomorrow, but after such a big, strong move lower, it's just, I just don't think the bears are going to wait patiently for price to go all the way back up to the high of that channel. That would be the ideal, right? That would be the ideal. The ideal situation would be sell the high of that bear channel. However, we're probably not going to get there. Again, it's possible, but if I'm a seller right now looking at this real strong move lower, am I really going to wait all that time? I'm probably not. I'm going to start looking for opportunities here. Anything that can get me off of this low. That means up above that 27, buyer failure back down, 51.50, buyer failure back down. Again, my kind of sweet spot up here is really above that 51.50 up to that 51.85. So this area right in here, right? So up, buyer failure, and back down. Basically, what is likely to happen here is the moving average is likely now to come down, right? Buyers try to buy the pullback, and we can then sell it, right, coming back down to retest that low. So keep your eyes tomorrow, even in the overnight session, right? right? Keep your eyes open here at 51.27, 51.50, and again at 51.85. And really what you're looking for is, as this price goes higher, you're expecting buyers to want to buy the pullback, right, and send it up, right, up to that high of that channel. What we're looking for is those buyers to fail on that pullback and give us that shot, right, to sell back down. And with that, we're looking for trap setups, we're looking for failure setups, and if we can't get a trap or a failure, then as the price starts to make the move back down, remember there's really two pieces to this puzzle as the price comes up off this low. As we come up off the low, we're initially going to get that buyer failure, but then that will turn into that breakout pullback. So it's kind of two pieces, right, to this puzzle. The first one's going to be the point where the counter trend buyers fail. Okay, price comes up, buyers try to buy the pullback, they fail. That will be the first opportunity. But then don't forget, after they fail, then we get the whole slew of sellers now that come in, a little more conservative sellers now, waiting for that price to make the turn, and then they can sell it on the way back down. As it pulls back, the objective will be to send it back down to retest that low, and then once we get to that low, then we'll see if they want to continue through that low. We'll talk more about that. We'll get a couple good examples tonight. We can talk about what it takes to qualify a breakout. So again, keeping an eye on failures up around that 27, right, 50, and again, that whole sweet spot up top. So keep an eye on something like this, right, where the buyers do actually successfully hold a pullback. We get up into this area here, then we break down, right, and back down here. As a buyer right now, right, so two spots there, right, seller failure, and then that breakout pullback coming back down. I don't want to sell here. I want to sell up off this low. As far as buyers go right now, this is where, again, I've already voiced my concern about being a buyer here right now until ultimately we can get and stay above this area here. Right? Once we can see the price breaking and holding here, once we see the market hold above that battle zone, then we can start looking at this market, right, as a more reliable bull market. The short-term buy, though, would look like this. Sellers try to sell the pullback, they fail, and then you get that little tiny, remember, in a bear market, a seller failure is not a reliable trading opportunity. So in order to be a buyer, you want to see the sellers fail, see that strong failure, and then hold that pullback. In a bear market, I will sell buyer failure all day long, but in a bear market, seller failure does not have the same amount of reliability, right, as if it was in a bull market, right? Bull market, absolutely. Seller failure all day long, right? As long as you have enough room and we haven't reached the objective yet. Don't forget, we're going to be doing all this tomorrow in real time with all of our students. I look forward to seeing you there tomorrow morning at 8 o'clock Eastern time. Let's keep going here. How about some S&P? Now, the S&P and the FDAX are very similar here tonight. So we're going to see a bunch of parallels here to the S&P and the FDAX. S&P's bullish and trying to retest today's high and possibly reach new all-time highs tomorrow or later on this week. The bulls have control after a strong push higher this morning turned into a bullish spike in channel, which pulled back just above the correction zone and is now attempting to retest the highs. The big concern right now is the most reliable buying opportunity has already occurred on that recent pullback. So buyers need to either wait for price to pull back again for another chance to kind of quote unquote buy low, or they need to look for traps to avoid buying into the highs. This is a really difficult spot right now because the deep pullback already happened. So if you're not in on this move right now, you're picking up leftovers right now, which means, remember, if I'm going to be a buyer right now, right, if I'm going to buy right here, where's my stop have to go? It's got to go where this trade becomes invalid, which means it has to go below that low. The problem now is now the risk-reward ratio is garbage, right? Now we have reward, but the risk is much larger. It's not a lot larger, right? But it's not a very reliable trade in form of risk-reward, because when the risk-reward is backwards like this, it has a self-fulfilling prophecy to it, which means buyers aren't going to want to buy here, and that's what kills that reliability on this trade, right? Buyers aren't going to want to buy high. Sure, there might be some rookie traders out there that can't resist themselves, but professionals